Welcome back, traders. I got quite the interesting show today, I believe. We're going to go through some charts, look at some news, and talk about the crypto market overall for a bit. So let's start looking here at Bit Digital. Yesterday I was talking about this area here being a potential bull flag, and initially this morning on the 30-minute chart it looked like it might be, with this big engulfing candle here in the morning going right up to 460, which was pretty sweet to see, but it was immediately followed by a big red candle coming down to 437, and then we're back in the box. I had to extend my upward channel here, so it went up to the top of my channel again, back through the bottom of my channel, almost closed outside of it. As you can see here, the little wick kind of just goes inside of it a little bit, right from there to there. And now we're on our way back up, maybe, kind of, we'll see. I still think the same exact analysis as yesterday. We're either going to break out of this box and see the highs of, and revisit the highs of 480, possibly beyond, or we're going to break down at this box if it goes long enough, and we're going to come back down to the $4 range and back test that before moving back on up again. That's it. So let's see what's going on with Marathon Digital. Let me turn this one off. Marathon Digital kind of did mostly what I thought it would do, came up almost to $20, and we got a nice long wick and then an engulfing red candle. That's bearish. The current formation of this candle is bearish. This big engulfing candle is bearish. So this one I'm expecting to come back into the channel here. Like I mentioned yesterday, probably revisit the center of this channel before bouncing around inside of it a little bit more, and either continuing up, or if it can't break this high and get into the $20 range, I expect to see it to break down and revisit some of these other areas of support down here. Because if you look at this thing right now, let me turn on the daily. On the 30-minute chart, the 200 moving average is down at $15. If we go to the daily version of that chart, if you look at the daily, we've just been basically going straight up since June 16th, just straight up. That's an unsustainable move. It can't keep doing that forever, but it can keep doing it for a while. So we're watching, waiting, seeing what's happening. If you look at the 200-day moving average, that's all the way down at 1087, 1081-ish, that region. By the time it gets back down here, I expect that moving average to come up to more like the $12, $13 range, and we'll bounce off that and continue upward maybe. Or if we break through it, we're coming back down to this consolidation zone in the 9s, maybe even revisiting some of these lows. It is positive that our current daily candle is above and staying above my channel here for now. We'll see where that ends later. But for now, Mara is looking a bit bearish to me. Bitfarms is now exiting my upward channel after reaching the top of it again. Again, I had to extend this, right? So I had to extend this again. This is where we were yesterday. This is where we are today. So yesterday we topped out at 212. Today we went up to 216, and now we're heading back down, breaking out of this channel. I personally hope that it breaks out of this channel. Get rid of this green line. I don't need that. I personally hope it breaks out of this green channel, upward channel here, comes back to test this down here, this line around like the 190 range before going up again, or really, what I really want to see is it come back to this 184, maybe break that and retest this line all the way down here, which would be in like the 150, 160 range, possibly lower. Like I really want to see it get the box into this area here. that would be ideal, an ideal purchasing area for me. Even better if it gets down to this region here, almost back to $1. If it gets down to that region there, that's like the perfect Goldilocks zone for me personally to purchase more. That's what I'm looking at with the charts right now. Nothing too exciting today. It's just cooling off from the meteoric rise from the last few days on all the Bitcoin miners. Maybe going forward, I think people will be taking profits, and rightfully so. There was just such a huge move, it would make sense to take profit. Crypto as a whole. So yesterday with the news for Ripple, for XRP, it moved up from, it was like 7 or 8 yesterday, and it has moved up to the 4th spot, overtaking BNB, Binance Chain. That's beautiful to see. I'm buying more of this now. I really think XRP is a great crypto. I've been holding it for years, and I'll continue to hold it and accumulate it through this cycle. This cycle might be the one I actually take profit, since this case is over. If we go in here, so this is Coin Checkup. Gives you a lot of cool information. Look at that chart though. It's just real flat for a while, and bam, right up to almost 90 cents. That was pretty great. If we look at the yearly chart, look at that, just mostly flat and then phew, just shoots up. So what interests me here is this all-time high. This all-time high of $3.92 that happened on January 4th, 2018. I want to see us get here and again and beyond. That's what I want to see. That would be a huge market cap right now. With the 52 billion circulating supply, to get back up to that nearly $4 range, we're going to need a $200 billion market cap to reach that. I think that's possible. We could see even more than that. I'm personally hoping for something more like a $300 or $400 billion market cap. That would be just perfect for my outlook here and my goals. But I do believe we could see the $200 billion market cap, possibly a bit more. And the reason for that is because of the use case for XRP. XRP, back when I was investing in it, was the banker's coin, which is one of the reasons a lot of people stayed away from it. But in my mind, being a banker's coin, that gives it use case, that means that there's going to be large money flow through it. And that's really interesting to me. Large, consistent money flow. That's what banks provide. So that'll possibly fuel this thing if XRP is actually being used on the Ripple network and the banks need to use it. That would be fantastic for XRP. That would just be a meteoric rise, like some of these, like today, but over and over again. The other thing is that I think that XRP, given this really fantastic news, it might be able to flip Ethereum. We might see this thing flip Ethereum. It's not unprecedented. It has happened before, more than once. Here, this is a historical snapshot of January 7th, 2018. This is the day after XRP hit its all-time high. It had 38 billion in circulating supply at that time, with a $130 billion market cap. And on that day, as you can see here on the CoinMarketCap historical snapshot, XRP was above Ethereum on that day. But that's not the only time it did it. Here, this is Forbes. This is a Forbes article from September 26th, 2018. XRP overtakes Ethereum as second largest cryptocurrency. So they overtook Ethereum again. And there's another screenshot here of XRP being a value of 56 cents, overtaking Ethereum on that day as well. So it's not unprecedented. It's happened more than once. Of course, this was in the same year. One was in January of that year. Another was in September of that year. But it has happened before without the SEC holding them back. I can see this happening again. So I'd like to finish today talking about the reason I'm in this trade specifically. And there's a few reasons, actually, why I want to be in the mining trade now that I'm off of XRP. I know that news is good. So the mining trade interests me greatly, specifically this cycle, for a few reasons. One of the biggest reasons is that on January 1st, 2025, banks can hold 2% of their reserves in cryptocurrency. And this is a rule that the Bank for International Settlements has decided that they will implement, that they passed back in 2022, that on January 1st, 2025, banks can officially have 2% of their reserves in cryptocurrency. 2% doesn't sound like a lot, but this is for all banks worldwide that do international settlements, which means they're big banks, could have 2%. That's huge. That's going to be a massive inflow of money for crypto assets. The other reason is due to China. So China has tried to restrict Bitcoin and crypto all the way back since 2013 when they banned banks from doing crypto transactions. They cracked down on exchanges multiple times. They've, in the 2017 run-up, they banned ICOs to try to limit crypto exposure in the country, and also and this is interesting, to block money from flowing out of China illegally. I've lived in China before. Getting money out of China is not easy. So they were trying to block people from using crypto as a way of moving money out of the country, which would make it easier. It would have been easier if I had access to things like Cardano or Solana. At that time when I was living there, I would have had a lot less stress about getting my money out. Then in 2019, they wanted to get rid of Bitcoin because it was too polluting. The U.S. also used that line, which, and in 2021, China outright banned crypto and has since reversed that entirely and has made crypto legal for buying, selling, and trading. And this, China being the second largest economy on the planet, makes it very interesting to me for this trade. You got the U.S., you got fueling it, you got China fueling it. Crypto is also pretty big in Japan and Korea. This thing's going to move. The third thing, this might be the biggest thing, Bitcoin supply shock. This has been showing up in feeds for me more and more recently. Bitcoin supply shock incoming. So this chart here shows the balance on exchanges in this yellowish color here and the price of Bitcoin. Anyways, you can see a divergence here between the exchange total balance of Bitcoin and the price of Bitcoin. So that is making people think that there's going to be a pretty big supply shock. The other thing that makes me think there's possibly going to be a big supply shock is this form here. So if you follow the ETF filings for spot Bitcoin ETFs, they all list Coinbase as their custodian. This is Coinbase's 10Q filing with the SEC as of March 2023 from Q1. And if you look at this is the crypto assets held as investments and crypto assets held for operating purposes. This is cost in the millions, so this is the current fair value, cost in the millions of their Bitcoin holdings. That's only 261 million. That's not very much. That's less than 9,000 Bitcoin. And that's significantly smaller on their operating purposes, their Bitcoin held for operating purposes. So we're looking at a supply of less than 10,000 Bitcoin being officially shown to the SEC on this filing. Now, they might have more somewhere. I hope they have more, because that's not enough. That's less than Hut Mining holds. That's less than Mara. That's less than Riot. That's less than MicroStrategy. A lot less than MicroStrategy, if this is the amount of Bitcoin that they're currently holding. And can you imagine how much inflow of cash these ETFs will bring, and demand for Bitcoin that will bring? If they only have this amount of Bitcoin, that's going to be a huge supply shock. Now, this is just what I was able to find in terms of what is publicly available in their holdings and in their filings with the SEC. You can see here, the United States Securities and Exchange Commission. I got this off the Coinbase website. Anyone can go and look at it. It's their 10Q filing for Q1 2023. Last thing. With miners, this is something to watch out for. We're currently kind of in this space here. This is my little box from a previous video. Go and check that out. But this is my little box of the crypto winter. We're about here. So this is right after the run-up in 2017, 2018. This is the year after that. That's where we are now in 2023 after the big run-up in 2021, 2022. This, where my cursor currently is June 26th of 2019, where Mara didn't hit a high. It actually hit its high in April of that year, which was $3.92. And then it came down, went back up to $3.50, and then we had about 200 days of bleeding, of just getting lower and lower and lower until we reached the lows here at the 46 cents in April of 2020. That's almost a year later. So, are we currently at that point with the miners? This year, the peak, or what appears to be the peak, is showing up in July. Are we going to do a move where we come back down to this area of $12 and then go up to 22 sometime in September or October? Not likely, because it's not October, but October. So, possibly, will we see a high of the 22, 23, and then come back down to these lows in the $6 range or the $9 range? Maybe. But if we look at history, history tells us that where we currently are is a little bit dangerous, and that we may be sitting at a top right now that is followed by nearly a year of downward moves before, and this is where the halving started taking place. This is the halving right here, this little bump. Right before a few days before the halving, we were at 45 cents. On the day of the halving, we were doubled up to 88 cents in that area. So May 11th, 9, 10, 11. People took some profit into the halving. The day after the halving, we were at 65 cents on May 12th. And then from there, we just went up and up and up and up. Back to a big old high. Right, before coming down 50%. Remember that, before coming down 50% again, or more. Was that 5 to 1? Geez, okay, coming down to, yeah, a little more than 50%, more like 60, 70%. So keep that in mind too, because that might happen again before taking off and just going for the moon. And it just didn't stop until we hit $76 from that. So where we are, currently a little bit dangerous. Currently, there's a lot of risk to the downside right now for the next possible year before we see huge moves up. So that's something to really keep in mind. This video is already getting extremely long, so I'm going to cut it off there. Thanks for watching. Like, comment, and subscribe, and have a profitable day.